All right, we are officially live Sunday, March 23rd, 2025. I'm your host, head out of the G Money Pies, here on this great, beautiful Sunday morning here. Great weather. Spring is now here in Texas, so a little bit better. I don't have the allergy bug stuff, so I always enjoy spring. I know some people do get a little bit of allergies, but other than that, I'm very good with this weather. And you'll probably start seeing me tan a little bit more because I also have a youth soccer academy school that I run, and I'm out there in the sun on the weekends, so it's my tan season as well. But yeah, a few announcements. So we'll do them again on the Monday study group, but now our Telegram is definitely growing. I think we're at 200 people now. We're at 75-ish before I started making the announcements, and we're at 200 people, so that's great. Um, if you guys don't remember, right? My former colleague back at the former company, Mr. Marcus McKinney. I'm actually going to have a meeting with him right after this class, and we're going to talk about maybe him coming in helping out once a month, right? So we can do some ETM Sundays. ETM Sundays, learn the ETM strategy in depth. In depth. I tell him I had a meeting with them, I believe on Friday. I cannot do ETM without you, man. Like ETM was a system. I mean, I can teach a supply and demand candles and everything, but it's not the same. What we had, the flow that we had, the introduction, the mindset before we go to the charts, that was money. Yeah, it flowed very well. So Mr. Marcus McKinney will come back. I am putting it out there. We had a conversation, and yeah, he's definitely needed here. So I'm looking forward to that as well. But other than that, we're also opened up our study groups little by little, right? We're gonna open up and like for example, study groups. I believe Dan's trying to get a little bit active here. Here's the Titan Circle. We're kind of working out. Like I would love for everything to stay here, but sometimes the quick chat communication can be a little bit not as fast, right? As like a Telegram or a WhatsApp. But again, though, maybe this is a starting point, and then we're creating on the back end on WhatsApp, where if anybody wants to be part of the Titan Circle, right, and follow Dan and follow the links, we'll send here a join link now from here, and then they'll join that WhatsApp community group. Same thing with the Golden Girls. Dr. Latrice and I are working on this one, little by little. But yeah, that'll be the same thing. So that's something to think about. We're working on. But yeah, these study groups, Titan Circle officially is open, and that's basically let me see that. He says links are in play. Oh yeah, there you go. So basically, it's just a study group, guys. Dan has good experience. He's learning as well. He's also a master in his own craft, and he has a study group that he goes in and after my classes he gets the group together and just do some back testing. But yeah, he'll cover trading related or covered in classes. There goes the Zoom link ready for you guys to have handy, and there goes the WhatsApp link. So you would click on the WhatsApp link, you'll join that group, and this one's open for everybody, I believe. So yeah, good stuff for their dad. Dr. Cheese, you and I will stick working together on the other one if we get more golden girls in the house. But yeah, the community is actually growing and not growing. The community is establishing itself just how I envisioned it, right? Where I can come in, make trading accessible, easy. But again, though, right, we cannot grow unless you guys are growing and also sharing knowledge. So let's go ahead and get started and look at these charts and let's go. All right. Um, you know what? I forgot the disclaimer, right? Well, obviously the Trade Circle is an educational platform. So any trade idea, any suggestions, it is trade at your own risk, but we'll get to going. Let's hit those C's. Let's hit those C's. Our Chanel triple C scenario thingy. And let's quickly get started. I'm gonna read a little bit of passages here. Just a summary that I had regarding the nature of the market. And it's just a way to understand trading a little bit better. Let's zoom in a little bit more. All right, there he goes. So the nature of the market, the nature of the market. So to properly speculate in trading, one must first understand sequences. The market does not move randomly. Excuse me. Instead, it follows a structured pattern of highs and lows that create a readable flow of price action. Every market movement is a sequence. One price movement follows another, forming a recognizable structure that traders can analyze and use to anticipate future price behavior. So that's the key thing right here, future price behavior. Our job is to literally speculate the future based on kind of what happened in the past, right? And then we analyze the charts, and then we try to speculate, what could happen next. However, the sequence is not confined to a single time frame. The market is fractal, meaning that the same patterns of highs and lows repeat across different scales. This fractal nature allows traders to see small sequences as part of a larger structure, where every movement of a lower time frame contributes to a broader trend or higher time frame. Okay, so what does this mean? Okay, let's just say we're in a 15-minute chart. Okay, and we see this nice little structure building up, right? We're making higher highs and higher lows. Okay, all right, perfect. And then the higher highs and higher lows are ending, and then we start getting a pullback. Okay. Regardless, though, right? Even though we are forming some structure here, even though we are making some lower lows, where is the impulse? Is the impulse bullish or is the impulse bearish here? There's structure going up and there's structure going down, right? But the impulse, based on what I drew, is more bullish than bearish. Okay. So once that impulse is complete, right? And once that correction is complete, then again, another sequence starts to form, right? And then basically it's up to the top side. Right. So that's what it means, right? Sometimes, you know, this on the lower time frame, technically the red path there, technically it is a downtrend structure, right? It's making lower lows, but it's only a pullback from this scale here. Okay, that's what it means, and we're gonna look at plenty of examples on that for that. All right, so understanding market fractals and sequences. Okay, a fractal is a self, and this is why we say the market is fractal, right? So a fractal is a self-repeating pattern that appears at different magnitudes in nature and financial markets. In trading, this means the same sequence of price movements appears across all time frames. A trend on a lower time frame is part of a larger sequence on a higher time frame. Larger trends influence smaller sequences, but small changes can also impact larger movements over time. Okay, that's really, really important right there. The larger trends influence the smaller ones, but the small changes can also impact movements. Just as a wave in the ocean is part of a bigger tide, a price sequence on a 5-minute chart is part of a larger trend on the hourly, daily, or weekly time frame. Understanding this fractal behavior helps traders avoid focusing too narrowly on small moves while also considering the broader market structure. Okay. So, this goes back to that, right? Even though, we do have to keep the whole market in scale, right? Okay. This is where I'm at in the daily. This is where I'm at in the 4-hour, 1 hour. And then from there, we can go back and make our trading decisions, right? And execute however we see the market. However, though, right, if you start seeing the market in different scales and you start recognizing, your 1 minute, 5-minute, patterns, you're gonna start seeing those same patterns on bigger scales. And you're like, wait a second. Whenever I see this in the 5-minute chart, I know it bounces up and it gets me $2-3 a price change on gold. But now I'm seeing on the 4 hour, like, wait a second, if I get in here, I could potentially get 2, 3 times more pips if I wanna apply that to my trading plan, right? So that's how it could work. So fractal sequences across time frames. To analyze market structure effectively, traders observe how sequences develop across different time frames. The higher time frame provides context, okay, the daily, and show the overall trend and broader market structure. The mid-level time frame shows active trends, right? So the 4 hour and 1 hour. These time frames help bridge the gap between the larger trend and the smaller sequences. Me personally, the 1 hour time frame is the one that bridges both. Okay, the 1 hour time frame is the one that bridges both. 4 hour, depending on the pair, it could be too high, and or it may not. The lower time frame captures execution points, 15 minutes to 5 minutes. This is where price sequences become visible in the finest detail, providing opportunities for precise trading decisions. So we can actually enter at any time frame. When we enter into the market, we are not entering on a time frame. We're simply entering where the price level is at. Now we're looking at patterns inside of those time frames to fine tune, to fine tune those details. That makes sense, right? But that's how I connected, right? I'll probably make a good visual on this because this is some good information for us to just kind of have it visually. By observing multiple time frames, traders can connect sequences together, allowing them to understand if a short-term move is part of the bigger picture. Okay, part of the bigger picture. All right, so in closing, before we get to the charts here, the market moves in sequences, but these sequences exist on multiple time frames at the same time because the market is fractal and because the market is fractal, a trend on one time frame is part of a bigger structure on a higher time frame. Recognizing how these sequences connect allow traders to properly speculate rather than reacting to short-term movements without understanding the broader trend. I like this last part here. By aligning sequences across different scales, traders gain a deeper understanding of price behavior and market flow. Okay. So yeah, that's the whole purpose, right? Can we connect everything together? Okay. So you guys see, right? This is in the PDF version. I am working on completing this PDF, tying it into the SMT equilibrium. So I'm just gathering notes, putting them together, and sharing them here with you guys. Once this comes out, obviously we'll share with everybody. So it's just getting some glimpses and pieces from that. So yeah, let's move on over here. Okay, let's move on over here and look at these charts. And for the most part, is just simply trying to understand, just how the market moves, right? How the market moves in the sense of its fractal nature. Okay, let me just hide some indicators here. Oh, no, by the way, I also on the platform I added the resource area recordings. The recordings are there. I was uploading videos about how to use the indicator, but TradingView shut them down because I think because of the invite only indicator, I couldn't share it or something like that. So I have to redo it, but they'll be ready before Monday. Okay, so the market is fractal, right? It repeats itself over and over again. One of the things that really kind of helps me um, look at the market better is simply having a side by side on how candlesticks work, right? And why, and this is the reason why I actually started to just fib one candlestick, right? This is exactly the reason why for that. So let me kind of adjust my chart here into this simple interval crosshair. Okay, set properly. So on my left, this is gold chart Oanda. So on the left-hand side is a weekly chart. And a lot of times, right, whenever people are marking up their highs and lows, they're only marking them up when they actually see structure points. So what I mean by that is this: they only mark up, for example, here. Okay, they mark up here, they mark up there, and so forth, right? But again, though, right, a weekly candlestick also has its own high and low, and sometimes price struggles to break that down, right? And there's structure inside of that high and low. Okay, there is structure inside of a single candlestick, high and low. So let's prove that very quick. Okay, let's start right here, maybe in this candlestick. Let me rewind a little bit. Everything should be rewinding over there as well. Okay, we go to this candlestick. All right, perfect. We're in the same area. So right now, we're looking at on the weekly charts for both, right? Weekly charts for both. The same weekly chart, excuse me. We're looking at the same weekly chart for both pairs. I think we are. No, we're not. This is Monday the 13th, 2025. I do got to rewind over here. Okay, now we're looking at the same thing. Excuse me. Wait, I think this thing messed up on me. Okay, this is not working. So we'll just refresh. We'll look at this last week's candlestick just to make it easy. Okay. So here is the previous weekly candlestick right here. Okay, if you mark up its low, and then you mark up its high, we're going to call here previous weekly low. Okay, and then we're going to call it previous weekly high up here. Perfect. Okay, so as you see, we marked up the anatomy of the candlestick. We marked up the anatomy of the candlestick, the low and the high. So it doesn't matter what time frame I change to, that high point and that low point on the weekly scale remains the same. Okay, so every time we switch time frames, the only thing that we're changing is the actual candlestick. Okay, so the left-hand side will stay the same. On the right-hand side, I'm going to go to the daily chart. Okay, and obviously here it was the low. Why are there 5 candlesticks inside of this area? Well, because, right, there's 5 days in the week. Okay, so on the weekly scale, we have just 1 candlestick. On the daily scale, we have 5, right? And well, obviously 5 make up the week. Monday, Tuesday, Wednesday, we're bullish. Thursday and Friday, we're bearish. Okay? But notice here, this wick, this candlestick this is only 1 candlestick. What price action did the daily chart do? It had an impulse and a correction. So far as now, right? If you can't see it, we'll start seeing it as we go lower and lower and lower. But what's the most important thing, right? That these numbers don't change. Let me actually put the price label on this. Price label on that. And you see the price levels do not change. They're staying the same. Okay, so it always allows us to keep things in perspective. All right, so let's go down to the 4-hour chart. Obviously, we're going to get more candlesticks, but we know where we started the week, right? And now we're getting some more detail in there. We're getting some more detail on it. We got a love price, that's right. We're getting some more detail. And this is actually all what happened all week long. And then 1 hour time frame, we get a lot more detail, right? And see that, and that's basically how we read the charts. That's how we read the charts. And for example, our strategy that we have on the back end, the 1, 2, 3 strategy, it's a very simple strategy, right? That we like to use. You look for, you look for your low and high. Okay, so in this scenario here, right? Let's say we considered, or actually no, we sold on Friday a pretty nice one. Okay, even though this candlestick was the way it is, right? On Friday and Thursday and Friday, we established this as our high and then this as our low. We put a fib on it, we measure it, and we find an area for retracement to take us back down. Okay. And that's how we do it, on that scenario. So it's just a matter of finding your high, finding your low. It could be one candlestick, it could be structure, it could be with or against the trend, but regardless, though, right? It's the same thing over and over again. It's just a matter of seeing the flow of price, yeah, seeing the potential direction of it. So simultaneously, right? We have the weekly candlestick here. We can technically do this the same thing on the 1 hour time, right? So if I go to the 1 hour chart, let me take this massive candlestick here, and I'm actually gonna make this a 1 hour high, okay, and a 1 hour low right there, right? And obviously on both charts we are on the 1 hour time frame. But as we start going down in lower time frame, right, you start seeing this candlestick being broken up a little bit more, right? I started my high here, and here goes my low. And 1, 2, 3, 4 candlesticks, because 4 15-minute candlesticks equal an hour, right? And if you go in even more detail, right? Here goes this huge drop that price balanced out the entire week. Okay, but yeah, that is the way that I found ways to kind of read a structure, a a explain the nature and the fractal nature of the market, is just to understand, to draw your highs and lows, change time frames so you won't lose perspective, and kind of stay in line with that. Now, this is not like a strategy. This is just more so just kind of getting information how everything works, right? To put everything together, right? The three rules that we have is for trading is find a find a technical analysis pattern. Okay, find the technical analysis pattern, mark up that technical analysis pattern, and then execute it. Execute it properly with know what lot size you're gonna do. Okay, know what lot size you're gonna do. I don't have the notes on it here, but we covered that before, right? And now that you kind of we see how the market is fractal. The whole purpose of this is, okay, how can we find opportunity? Okay, so as we mentioned, right, number one, find a pattern that you like. Number two, mark up that pattern, mark up the entry, mark up the stop loss, and then also mark up then from there measure your um your lot size. Okay, so let's look for some examples here. Okay, here on the 1 hour time frame, the technical pattern that you would look for should tell you if I should buy or sell. Okay, patterns are not going to work every single time, but at least it should tell you, okay, I'm looking for buys, I'm looking for sells. I'm going to focus here on some ETM candlesticks, right? Here, these last three candlesticks, what are they? What pattern is this? Okay, what pattern is that? Let's see what we got. Perfect. All right, so let me write these rules down here. I'll put here technical analysis pattern. We have a drop, base, drop. Okay. What does this drop, base, drop tell us? What does it tell us? It tell us to buy or sell. Look for sales. Okay. We're done. Okay. With the number one. Okay. Number two is it basically is what I call strategy or markup or your entry points. Okay. So based on the drop base drop, okay. Okay, we mark up. We know sellers are in control. We're looking for sales. We mark up this zone right here. Okay. We mark up this zone and we label it 1 hour drop base drop. Everybody good? Where does the stop loss go in this? Well, the stop loss has three stop losses. That just depends on the scenario, right? But if you're looking for sales, your stop loss goes at a high. Okay. In this scenario, there you go, talking to trees. We could put it there, right above the second drop. We can put it there, or we can put it there. It doesn't really matter, but as long as you know that we put our stop loss at a high, right? So I'm gonna put here stop loss. All right. And now we are technically done. So this is basically the 1 hour entry. Okay. We can sometimes get the wick, can sometimes get the body. It will play one of those. Okay. Sometimes it gets the wick and takes off. Sometimes it needs to get the body and takes off. Sometimes it needs to get the close. Sometimes it comes get the high. But regardless, all right, that is our entry point. That is our entry point right there. Let me actually, well, here I am going to enter at the open of this candlestick. Okay. So I'm going to put here entry. All righty. And we're done with our markup, right? We're done with our markup. So we completed step 2. Strategy, mark up your entry points. And all we need is at least your entry and your stop loss. We technically do not need our take profit just yet until the third part. Okay. Part 3 is basically your risk management. Okay. Once we have our entry and once we have our stop loss, we can count our pips. Okay. So let's see what our entry price is. I'll make those numbers a little bit bigger for us to read. Settings change. Or I just haven't had enough coffee. There it is. All right, perfect. And we'll color this red color, maroon color, and our entry will be in the white. Okay, everybody following along so far? I'm trying to make trading easy, practical for the world to know. And I believe it all starts from this right here. Find your pattern, mark up your strategy, know how to risk management. 1, 2, 3. Okay. So our entry zone is 30.47. Okay. Our stop loss is 30.53. Okay. So then from here is just about subtracting the difference, which is that $6, right? That is a $6 difference. which it's 60 pips, right? 60 pips. 60 pips. So now we go to our, well, I've been using different calculators on that. Let me bring the other one. So I do like the other one. The other one's very simple. This is the one that we have on our indicator is actually the one that you use proper risk management with. So let's go ahead and do that one. Okay. Because we are going to be running over proper risk management here. All right. So we have a let's say $1,500 trading account. We want to risk 1% per entry. And what is our stop loss in pips for here? Well, this is what $6 difference, 60 pips. You put in there 60 pips. Okay. And then it'll calculate it, will tell you what lot size to use so we can make this statement true. Okay. So you have to put a 0.02. Every 60 pips you'll make or risk $15, and $15 is 1% of 1,500. Okay. Ready? Got that? Very nice. I have no idea what just happened. Perfect. So now, right, you know what to do. Now we can set our take profit, right? That is our entry. Our stop loss is up there, okay? And we can only set our take profit based on our trading plan. Do we want a one-to-one? Meaning that we're a one-to-one, meaning that there is 60 pips here of stop loss and 60 pips here of take profit. Correct? Well, let me ask you guys a question. What if I chose the stop loss to be here, right there, instead of up there? And I enter at the same spot, but I put my stop loss there, and my stop loss from entry to stop loss, it is now $2, which is 20 pips. So now my one-to-one becomes what? 20 and 20, right? Let me fix that. You guys see that? Maybe you can't see this part here. It is a little gray. Let me actually fix that. Okay. So that's what means to one-to-one, right? The number of pips. Now that's the easy part, right? The trickier part is not doing proper lot size for your 2020. So now, right? If we would have entered, if we are only going for 20 pips here and use this lot size, okay? Well, we're not gonna make $15, right? We're gonna make less because this lot size here, excuse me, this range in pips from entry to stop loss is much smaller, right? So in order for us to make that 1% or risk that 1%, we have to adjust our stop loss to 20 pips. And it wants us to use a 0.07 for whatever reason. It should have been 3, but maybe there's some calculation on there that just kind of changed. There you go, Dr. Trees, larger lot size. And that's a smaller stop loss, but it's also a much smaller take profit. So you win quicker. Okay, you win quicker. All right, let's go back to our 60-60 scenario. And again, once you guys know your numbers, you can start, winning, understanding the market more. Okay. All right, so I'm gonna go for 3-1. All right, everybody good? All right, so we hit play. This wick just barely missed our body. If we would have entered at the wick, we would have been in. But it just missed it. No problem. It happens. You hit play, but eventually we'll come back. There it is. So again, drop, base drop. Sellers are in control. The entry point is the equilibrium. Price is always trying to come back to equilibrium. Very similar to the midpoint boxes, right? We read the structure and the midpoint is the area where price likes to return. All righty. We are in the trade now. From this point here. And let's see if price can make it to take profit. There it is. All righty. A very good trade there on how that worked out. And then we get another massive drop from here. Okay, another massive drop from right there. We do got our ask. Remember, the market is fractal. We've been on the 1 hour the entire time. We have not changed anything, right? So the way I used to backtest, like, okay, I understand this entry here. I see the drop, base drop, etc. But why did price sell from here? Okay, why did it sell from there? Well, you have to look a little bit left to see what's going on there. And if we look a little bit left, there is no ETM candles. Now, there is other stuff, right? Like a 1 hour fair value gap, all that good stuff. But here to the left, there's nothing. So what did I used to do to backtest? Well, I used to always kind of put a horizontal line like that. And then I always used to do, okay, I made a little cross point right here. Okay, what was right here that made price turn? Well, let me go up a time frame. Let me see if I see anything. Okay, still nothing. Still nothing. Regarding ETM, right? Regarding ETM is nothing. Maybe there's a break of structure candle. Look at this, Dr. Trace, this is your evening star pattern right here. They came back and retested it, right? And again, that's in the bigger scale. Evenings, actually, we have multiple evening stars here. Right, evening star there, came back and retest, sold off. Evening star here, came back and retest, boom. Okay, so they're all right there. Yes, but we're still trying to figure out why the price turn there based on the ETM strategy. Okay, and now I'm going lower time frame. Now in the 45-minute, nothing that I like there. 30-minute, nothing. 20. But you see, I'm not changing the price, right? All I'm doing is just changing the anatomy of the candlestick. Righty? That's all I'm doing. Changing the anatomy of the candlestick. But the time, everything else stays intact. Okay. Let me see if I spotted something. Sometimes there is nothing, to be honest. Okay. Here is a form of a drop base drop in there. And we'll just go to the 1 minute chart. Let's see we have it. Yeah, and this and there really was not an ETM pattern. I was trying to see if we can find one there so we can kind of do the same thing that we did earlier, but it didn't do it. It didn't shape it up. Okay. But regardless of it, that's looking to the left-hand side, that kind of would work. Okay. On the ETM strategy, the repetition wasn't there. But if we do a back test on a high-low fib, we take the high to low. Okay. And it rejected just shy of the 61% the first time. All right, perfect. So now we got a new high and a new low. You fib from high to low. And it came back again to the 61%. And then it dropped off. You see, guys? So there's, just understanding how the market flows, it works. Okay. You'll understand the sequences of the market, it definitely works. And then it slows back down. Okay. And those are the things that we try to look for multiple times. All right, let me look for some more examples, maybe in a different pair here. Let's go to Nas. I think Nas had one in the 45-minute that we've been monitoring, or that I've been monitoring for some time. Yes, I think, yep, purple is right. And that's just a matter of finding those drop base drops. The easiest one to locate is the drop base drop. And I think I liked it more in the 45-minute. Yes, right here. So, to put a full confirmation on this, before price even got there, rewind. Obviously, here on the 45-minute chart, yeah, we have a nice downtrend here. It doesn't matter if I'm in the 45-minute chart, the 1 hour chart, the 2 hour chart, that trend line's not going to change. You guys see that? That trend line's not going to change. But what will give me confirmation to enter before the trend line? But you start looking for those ETM candles, right? And the one that I did like a lot was this little 45-minute one. Yeah, we actually have a BEC followed by a drop base drop. And we'll mark up that drop base drop right there. Okay. We stretch it out. So we found our pattern. Drop base drop again. 45-minute chart, look for sales. Okay. Our stop loss goes up here. This is our entry point. The trend line gave us confirmation. And we just simply wait for price to come back to it. We do a sell limit order or just put an alarm and market execute. Yeah, we know where we enter, we know where we exit. That's 148 points of stop loss. And then we just look for a 1 to 2, 2 to 1, or whatnot. Okay. But the same thing over and over again that we just did. I think it touches it at some point. Sometimes it takes a while. There you go. I think we touched it right here. And play. And I think, yeah, there you go. Take profit hit based on that 2 to 1 setup. Okay. Based on that 2 to 1 setup. It's right there. Even on the way up, guys, you see how I formed here a rally base rally. This rally base rally managed to take price up. Here we formed a demand BC, right? Where this pattern here tells us to look for buys. The stop loss for this is at the low of the engulfing candle. And price wins up, entry, take profit. Here's another rally-based rally that drove price up. Now, granted, this one would have been stopped out because, it went below that first rally. But again, just identifying a technical analysis pattern, okay, and know how to mark it up and know what that pattern is communicating with you is very, very important. Okay, very, very important to do. All right. And the ETM candles just make it easier for absolutely. Yeah, that strategy by itself can do a lot. Can do a lot. Okay. All right, y'all. Let me close this out here. Let me let's look at gold. Let's review what happened with gold and speculate what's gonna have, and then we'll wrap it up for this Sunday morning. All right, so obviously we reached 3,000 last week. We went above it as high as 30.55. And the question is, right, will it slow down? I believe this is the last week of March. Correct me. Next week is the last week of March. Correct me if I'm wrong. Let's see. Yeah. Well, Monday is the 31st. So technically, no. But I do like to analyze, see how the monthly candlestick looks. Okay. We've had three consecutive um, bullish months. So this is March, February, January. Okay. Three consecutive bullish months. This candlestick has not closed. It still needs 8 days and 8 hours left. So yeah, so three consecutive months here. We have the this there, but this candlestick hasn't closed. So these last week of each month becomes a little bit tricky, right? And why is that? Well, because this monthly candlestick probably already created its high and low. It probably created low, high, and low, right? So now we're just basically going to speculate where the month is going to close. We already have the open here, but now we're basically speculating where the month will close. Okay, where the month will close, and we'll see. And that's a little bit tricky. However, with the fib can help us with a lot of things. If we measure the monthly candlestick by itself, give me a second. A student has messaged me very quick. Alrighty. So yeah, so we can measure, right? We can measure that monthly candlestick by itself. And again, right, the market is fractal, the different sequences. Once I place this fib here, it's not going to move anymore on the lower scale. So that 23% is going to stay intact. That 38% is going to stay intact. And a lot of times, right, a lot of times price is closing at the 23% or slightly lower. A lot of times. Okay. A lot of times. This one, this one did not. This one did. This one did. And some, but again, I'm speculating that potentially we come back at least to the 23% and close. Okay. And what price line is that 23%? Well, let's find out. 30.10. So we're at 30.23. I'm speculating that we could potentially close the month at 30.10. Okay, so it's about $13 drop left to go. But we'll see. All right. So now let's go to the weekly candlestick. Okay. Okay, we just only have 3 weeks. Excuse me, we only have 3 candlesticks. Why? Because we have one more week left of information. And it's been 3 bullish days. Ooh, check this out, guys. Remember, sequences, patterns, they repeat themselves over and over again. Okay. Let's go to the daily chart. What happened last week? I'm liking this. I am liking this a lot. Hold on. I am liking this a lot. Left-hand side is our daily chart. And then we're going to look at the last 5 candlesticks, right? 1, 2, 3, 4, 5. 3 consecutive bullish days, followed by 2 bearish days, right? Well, over here, we have something very similar. Very, very similar. You guys see that? We have 3 consecutive. Now, this is a monthly chart. We have 3 consecutive bullish months. This month in March is going to close bullish for sure. April, we may get a wick above this high. And then maybe we can have 2 nice bearish days. How about that speculation right there? Matching this sequence. If we can get that, right? Where this wick came back to the open of the second candle. So this is 1 candle, this is 2, this is 3, this is 1, this is 2, this is 3. The 5th day came all the way down to the open of the second candle. Here's the open of the second candle. And let's say we start from the high, and then for 2 months down, that is $258. That's 2,500 pips. We're not going to catch all those pips, but we have at least, if that happens, we can focus on some sales maybe for the next 2 months. And we got plenty of room to speculate downwards. So, okay, I'm gonna see that. I'm gonna keep an eye on that for sure. Okay, keep an eye on that for sure. All right, perfect. Yep. So 23%. Let's go now to, let me mark up the previous weekly candle, as we always do. And the only reason I came to the monthly candlestick is because, the month is about to close. So previous weekly high. Previous weekly low. We'll come back in a second. Thinking it. We're wrapping up here shortly. Fix this all the way. You'll be able to see this. Put it at the bottom, and we'll put it at the bottom as well. All right. So those are previous weekly high, our previous weekly low. It'll be 38% of the month. And we actually already touched the 23%, but went back above. Okay. So that 23% on a smaller scale is already taken into effect. Okay. Let's go to the 4-hour chart. Here I'll start trying on the midpoints. Okay. Just so you kind of get a nice scale of things. For us there. Okay, and then what's the 4-hour structure telling me inside of this? Well, it's telling me that we are more bullish in structure. However, we are at a higher high. So remember, the boxes are basically guiding us just to keep everything in frame. Okay, and actually the boxes are allowing us to also give us the framework of the fractal market, right? Because the market repeats itself too much, that sometimes it has it all over the place. All right, so I like my 4-hour, 1 hour. Daily is also good, but it is. But at least if we keep the 4 hour and the 1 hour in frame, remember the article that I was reading to you guys, the 1 hour and 4 hour kind of connect everything together. So here on the 4 hour chart, only what's inside of the 4 hour chart, okay? We do our structure. And there it is. Low, high, higher, low, higher, high. So we're in a higher high area. Higher high area. Now it's trying to break 23% of the monthly candle. Okay, the momentum was definitely there. All right, let's go to the hour chart now. The hour chart is still somewhat bullish. Okay. And itself here, we can draw a structure, or we can even draw trend lines to kind of like get us an idea where those support and resistance areas are at. All right, but we do have some structure here to the downside. This from here to here is a pretty steep impulse correction, then another impulse scenario. Okay, we came there and balanced that out. So buyers stepped in at this area because we're at a support and resistance area. We're starting to build some structure here to the downside. And it's just a matter of the sellers are going to step in this area here or not. And again, right, if we establish ourselves above that 23%, and then we also start breaking this structure up, we know where to go now, right? We know where to go, and price would just go up to the previous weekly high or the extensions. Remember, this fib is from the monthly candle. The previous weekly highs there and the previous weekly low are right here. And then our job is to just simply speculate, okay, is price going to go and complete the extension, or is it going to go to a retracement level? Okay. Thursday and Friday, it worked its way down to that 23%. And 23% buyers stepped in. And now this structure here is going to be the one to decide if we go lower to 38%, or we just simply keep moving up. Okay. It has not taken out two previous lows before the breakup. May go back to that WC at 38%. Right here, Dr. Latrice, this little area. Yep, there you go. Which is also very near the midpoint of the hour as well, of the 204 midpoint, which is that this line can also be attracting it, okay, to that area. Here, I'll turn on my other boxes just so we can have them intact. So now let's kind of see the strength of this. Okay, let's see the strength of this momentum. All right, so we have a potential speculation to the downside. And now I've turned on the other two boxes, okay? Well, the other two boxes, the other midpoints are also they're in a bearish formation, right? They're in a bearish formation. Meaning that the midpoint of the 204 is down there. And the midpoints of the smaller box and the big box are in a bearish formation. The order here, this is the 17 midpoint. And then the order here is the 52 midpoint. This means resistance. This means resistance. Okay. So, could this area hold price down? And if it does, and we can also get below the 23%, I like for us to continue down towards 29.80. However, these candlesticks get above the midpoints, and then time starts shifting forward, and now we're in a bullish scenario. Well, we'll go to the previous weekly high. That's why it's important to wait, right? We're important to let more information come in. Let more information come in for us to speculate. Next candle, let me see, Dan, on this on the 1 hour chart. You're right. You're right. All right, hide this right quick, guys. Hide charts. All right, so just looking at the big box by itself. Remember, this what's keeping this frame the way it is this little wick right here. That's the low. And then this little wick up here, that's the high. That's what's keeping this frame at this range. Okay. And therefore, the midpoint is there. So, the moment in about 2 hours, when this candlestick closes, when the new candlestick opens, this last candlestick will be eliminated. And then we'll be at the low. Wow. Yeah. And then now we do have some rising candlesticks. So actually the midpoint is actually going to get closer to price. Okay. So that's gonna be good. And it'll raise it up maybe to that 38%, guys. And it'll make it a lot easier for it to come to this W and that 38%. So we'll see. Okay. It'll all depend on what happens right there. All right, but yeah, so this is the analysis that we have here so far. Obviously, intraday is where we kind of really go in, but our intraday scenarios won't be there really until we start looking at the market live. So my speculation is this. This is going to be our decision zone, the midpoint of this area. Either we do something like this, and then we go up, or we simply break it, retest, and then we go up. Okay. I'm going to put in here 52 midpoint. Right there. I'll share this with the class. And we will wrap it up. All right, perfect. All right, well, we'll begin to close shop, guys. Everybody have a great Sunday. Enjoy the rest of the day. And yeah, the recordings, just to make sure, because I was getting asked the question where the recordings at. The recordings are right here in the back end. Go to resource and recordings, recording playlist. Okay, and the Sunday study groups are here. This is the Monday support calls, and these are live tradings. You only see one video here, but we actually have a drop down button right here, and you can select some more. Okay, there may be some or two missing in the order there, but the rest of the videos are right there. So, for example, that's the February 2nd. This is March 16th. All right, and they're all right there. So that's kind of how you follow it from here. They're all right here, just in one area, broken down into by days. Okay, but thank you guys for being here. Great session, in my opinion. Glad we're able to cover this, and we'll return back strong Monday for a support call, and then we'll begin live trading for the week. Mr. Marcus, welcome in, man. Thanks for that. We'll see you guys in the next one. Have a good one. Thank you, Lena. Thank you, Roy. Have a good one. Have a good one. Glad you guys were here.